So this is EF3-20. Basically, this gives us a set of different scenarios with prepaid rent. And so this question is a little redundant in that it's kind of like the same problem done 4 times. But this type of calculation is going to be important for not just prepaid rent. It's going to be important for calculating inventory, other prepaid expenses like office supplies. So this conceptually is an important concept to understand, this calculation. So let's do the first one and hopefully it'll become a little more clear why. So basically at the start of the year we have a balance of $1,400 for prepaid rent, and during the year the company made payments for prepaid rent in addition to this $1,400 starting balance of $700. And then at the end of the year, the account balance was $800. So what was the amount of expense for the year? So let's break this down. So our starting balance was $1,400. And it said we made additional payments of prepaid rent. So prepaid rent payments. So that means that we had the starting balance of prepaid rent, but we're paying more cash to increase this balance. And so we had that of $700. And then we're going to have less the expense, which right now is unknown. And then we have our ending balance of 800, I believe. Yes, 800. So how do we solve for this question mark? We basically take our starting balance and we add in what we paid to increase that balance. So that is 2,100. And so we now take this 2,100 and subtract the ending balance. So this is the amount that we have to expense to get from the starting balance plus what we added to get to the ending balance. So this $1,300 is how much we expense in this year to get from this starting balance plus this prepaid rent additions less this expense of $1,300. That gives us $800 as our ending balance. So let's see if that's correct. Okay. Okay, so next, it's going to give us some slightly different information. So the beginning balance is 1,000. During the year, the company made payments for prepaid rent of 600. Okay. And then we recorded an expense for the year of 900. So it's telling us now this question mark. So what is the company's ending balance for its prepaid rent? So in this case, we're solving for this. So how do we do that? Basically, we take our starting balance, we add what we paid in addition, and then we subtract out our expense for the year. And so that's $700. Okay. So if you notice, we're just taking this basic set of relationships, starting balance plus the additions less the expense equals ending balance, and we're just solving for different parts of it. So Tropical View had ending balance in his prepaid account of 1,000. So ending balance is 1,000. So this is scenario A, B. So now we're doing C. So our ending balance is 1,000. And during the year, the company made payments of 900 and recorded an expense of 600. So the expense is 600. Prepaid rent additions were 900. And so now it's asking us what is the beginning balance. So we're solving for this here. So how do we do that? We basically work backwards. We'll take our ending balance, we'll add our expenses, and then we'll have to subtract the additions. So let's see if this works. Let's just back check this. So if 700 is our starting balance, $700 plus 900 minus 600. Oops. Minus 600 gives us our ending balance of 1,000. Okay, so let's see if that's correct. What did we say it was? Okay. Okay, that's it. Actually, one more note. So instead of this being prepaid rent, we could add inventory, where you have beginning inventory balance plus inventory purchased less cost of goods sold equals ending balance. So we will learn more about this in chapter 5, but basically this type of calculation where you have a starting balance, you see what you added, you see what you expense, and then you get an ending balance. We're going to be using this quite a bit, so it's good to be kind of familiar with how this relationship works between these different things.